Hi guys, and welcome back to the Cosmopolitan Italian. Today with some different type of video, not really focused directly on investing. As you may know, I have been investing in real estate in the past couple of months. And since I live in a very, let's say, expensive area such as Northern Virginia, and since I'm not, how do you call it, guy, Richie Rich, I had the only way to do it here is to mortgages. Now, I learned 2.5 years ago when I moved here that unlike Europe, where getting financing at a very young age is pretty much impossible, here the access to credit is very simple as long as you have a good credit score. Now in my case, I went through the typical route of starting with a secured credit card and then building my credit and then finally get a mortgage. However, I learned that in many cases, this is not always the case. Many people, and unfortunately also some of the people around me, were not able to start out with a secured credit card and had to find other routes to start building credit. And this is how I started to learn about credit building loans, specifically one that came out the most, which is SELF, credit building application, which we'll focus on today. Again, this video only will show my opinion. I'm not a financial advisor, so if you're looking into something that can help you build your credit, please do your research and take your decision. This video will show you the many reasons of why SELF could be a very good solution for you to build your credit from scratch or after bankruptcy. And will be based both on the research I did online and also the active experience of my friends using it throughout the months. So there are 4 main reasons why SELF is a very appealing platform and very interesting. Number 1, there's no need to have credit history, and whenever you apply, there will be only a soft pull, not a typical hard pull from credit card companies. Number 2, there's reporting in all the 3 major credit bureaus. Number 3, you can add a SELF credit card after a while you've been using the platform and after you meet certain requirements. Number 4, there's a pretty low cost to all this if you consider the whole long-term picture. You will see this in a while. So number 1 is the lack of credit history requirement to apply and to get approved, which again leads into a very high approval rate to get this credit building loan. So as I learned in past years, not everybody gets approved when applying on a credit card, a secured credit card, because of many reasons. And on top of that, whenever you apply, most of the cases, what you will get is a hard credit pull, which damages your credit score. Now, in the case of SELF, they will not do a hard pull, they will do a soft pull. So they will check quickly your credit score, but it will not appear on it in the next couple of months and years. I can confirm to you that all my friends that tried it, and it's less than 10, but it's still a couple, were approved. I also learned that SELF applies more importance on other checks, one of which is called the check system. Basically, it controls your bank history, if you're doing some fraud, if you have bouncing checks. So in other words, unless you're a financial criminal, you should be mostly able to get the SELF credit building loan, which is very good. It means that it's easily accessible and pretty easy to get approved on. So number 2, we have reporting in all the 3 major credit bureaus. What does this mean? So whenever you apply to mortgage, a car loan, you name it, through a bank, the bank will do some kind of credit checks. And the way they do it is they go through these credit bureaus who have your credit score and then make an evaluation. Now, they could go through one of these credit bureaus, they could go through a combination of 2. It can be multiple combinations. Now, being able to have a credit score and continuously check it throughout all the 3 major credit bureaus is very good, so you can understand your possibility to get approved for credit overall, rather than only on 1 credit bureau or 2. It's always a good thing. And number 3, we have the possibility to add a SELF credit card on your credit history. One of the metrics of your credit score is also the amount of accounts you have and the type of accounts you have. So let's say you start out with a credit building loan, you will have one line of credit, which is a personal line of credit, a personal loan. On top of that, being able to add a credit card will enable you to get a different type of credit and a second line of credit, which improves, in both cases, your credit score. So what Self enables you to do after a while, once you met a certain amount of time you're putting into the loan, as well as a certain amount of money you put in the loan, they will enable you to also get a credit card. And they enable you to use the amount of money you put in the loan as your secured limit. On top of that, the more you go on, they enable you to raise the limit based on the money you put on the loan. So let's say you have $200 in your personal loan. It's not a one-on-one relation, but let's say you have $200 in this loan, and now you can apply to a credit card. You can get a credit limit of, let's say, $150. So it's proportionate to what you're putting in. I don't think it's a one-on-one perfect relation, but it's proportionate to it. So let's say that a couple of months ahead, you have $500 in that loan. You may be able to raise that limit to $350 or $400. So the more it goes on, the more history you build, you can add a second account, and your credit limit increases. So you can increase your credit score throughout multiple metrics, which is even cooler. And again, as I told you in point 2, all this happens and is seen throughout all the 3 major credit bureaus. So you get to get credit history to increase it, to add your credit lines, and to report it on all 3 major credit bureaus. So last but not least, number 4, we have the cost of such a powerful tool. You might be very picky about the $9 initiation fee, the $25 credit card fee, which, by the way, the credit card doesn't even give you rewards, and there are many other credit cards around that are free and give you cashback or whatever, or even the very high APR on the credit building loan. Now again, you gotta think about to whom this is aimed. This is for people who need to build credit from scratch, or who need to rebuild it after a very bad credit history, a bankruptcy, you name it. And if you think about the long-term effects of such a powerful app, meaning a high credit score that will lead you to pay less interest in the future, to buy a car, a house, name it, I think the cost is very worth it. Now let's make a general example. In 2 years after using such an application that enables you to get 2 years of history rather than wait or do something else and then get a credit card 1 year later, such an application enables you to get enough credit score to buy a house for 1% less APR. And let's say it's a $100,000 house. So you paid a total of under $200 to yourself in the past 3 years. Okay, or $300, make it a worst case scenario, to yourself in the past 2 years. They enable you to get $1,000 less of interest a year on your future mortgage due to a higher credit score. So you spend $300 to pay less, $1,000 less in the future. And we're talking now about only one loan. Let's say you get a mortgage, more houses, even better. The return investment is quite high. That's how you understand how powerful the tool is. Always have a long-term mind rather than just seeing at the short-term costs. And this is why I believe Self is a very powerful tool for those who want to build their credit score from scratch, or those who need to rebuild it after a bad credit experience. If you like what I'm doing, please leave a like. If you have a couple more questions, since I didn't go too much into detail, please leave a comment and I'll reply to you as soon as possible. If you like what I'm doing, guys, please subscribe and have a good day.